Hola, hola. Bueno, vamos a empezar ya, ¿eh? Hola, buenos días. Good morning, everyone. We shall start right now. Please take your seats. Grab a coffee, some water. It's all here for you. ¿Qué tal, tío? Good morning. Buenos días. Muchas gracias por venir. Thank you very much for coming to our call. Bueno, estamos en España, ¿vale? Estamos en Barcelona. Podemos hablar en castellano, en catalán, en inglés. Algunas de las ponencias van a ser en inglés. Entonces, bueno, vamos a hacer un poco megamix, ¿vale? De idiomas. So, thank you very much for being here. My name is Carlos Salinas. I'm the head of digital assets for Morabanc. We are the first bank in Andorra to have obtained the digital asset license like 3 years ago. We're very happy of having entered this line of business because it's just bringing us a lot of joy, especially with markets the way they are behaving, except for Saturday, right? So we are basically a family-owned bank, which basically is actually been a bit dark, right? ¿Qué pasa con la luz aquí? Okay. That's much better. Yeah. Let me see the people. So Morabanc is based in Andorra. It's a family-owned bank. We are a group that manages around 17 billion right now. We are in the process of attaining a banking license here in Spain. We already have presence for many years from a wealth management perspective. Now we are basically betting for the Spanish market, which is the natural move for us. We're going to become a fully fledged bank in the next few months, years. Regulatory processes are a bit longer than we all like. So our side of business in terms of digital assets, we started, as I said, like 3 years ago. We enable custody. I think is the key piece for any bank really to start. We also offer access to markets for our private wealth clients, and that has allowed us to basically to grow a very nice business line, which I can say today that we're probably one of the most active banks in the south of Europe in terms of Bitcoin trading and Bitcoin custody, and we're very happy for that. At the moment, we're going to keep consolidating basically what we've achieved. As I said, basically we are in we have another strategic priorities now at the bank. But we're very happy to be here and to explain this to all of you. So today we have, we're going to have 3 nice panels. One of Eric, which is my partner in crime. He's going to explain us about, the impact of that, of digital asset treasuries, and what is our vision on that aspect on the market. Then we have one of our partners, which is Richard from Sys Capital. We distribute his fund for our clients, and we're very happy with the partnership. Thank you, Richard, for coming. And finally, we have Carlos Matilla. He's the CEO of Morabanc. This is a company that we invested as a, let's say, as a VC or corporate VC investment. He will explain later. Basically, he's building something very exciting that I think will bring a lot of wealth and value to the industry. So without further ado, I'm going to pass the word to Eric, the next part of the presentation. And again, thank you very much. Muchas gracias a todos por venir y por estar aquí acompañándonos. Muchas gracias.
Perfecto. Bueno, buenos días a todos, gracias por venir. Y bueno, como comentaba Carlos, yo soy Eric, estamos en Morabanc, en el departamento de activos digitales con Carlos, y al final somos un poco los que la estamos liando ahí con todo este tema. Pero bueno, hoy quería hablaros sobre algo que no está tan ligado con el tema del banco, pero es más allá algo que está pasando y que ahora se está empezando a escuchar mucho, que es todo esto de las DATs, ¿vale? Las Digital Asset Treasuries o las tesorerías de activos digitales. ¿Vale? Entonces, bueno, habréis visto ya sobre todo en los últimos meses, ¿no? Pues noticias acerca de compañías que se dedican a acumular en sus tesorerías colateral que es cripto o activo digital, ¿vale? Tenemos sobre todo la que hace más ruido de todos, que es MicroStrategy, que se basan en acumular Bitcoin, pero luego tenemos otras que también se han estado empezando a subir al carro con todo el tema de Ethereum, Solana, etcétera, ¿no? Pero yo os digo, las más grandes ahora mismo y de momento donde se está moviendo todo el capital es en Bitcoin. Entonces, bueno, os decía, ¿no? Al final del 2025, un poco la tendencia de lo que ha estado moviendo las noticias y el mercado últimamente, también sobre todo en la parte de Wall Street, que ya no estaba tan solo en la parte cripto, eran las DATs, ¿vale? Entonces, al final, para entender un poco qué es lo que hacen, son simplemente empresas que están cotizadas en una bolsa y que su función principal es acumular un activo digital, ¿no? Entonces, mucha gente al final ha empezado a intentar definir exactamente qué son esto de las DATs. Yo no creo que haya una definición realmente estándar, algo que se pueda estandarizar, porque al final cada una lo hace un poco a su manera, pero sí que tenemos por ejemplo, de Tesla, el cual ellos compraron, digamos, Bitcoin hace mucho tiempo, pero simplemente como un one-off, no es algo que estén recurrentemente haciéndolo, ¿no? Entonces, al final, definir eso como una DAT no creo que sea lo correcto, pero hay gente que lo incluye en ese paquete. Pero al final lo tenemos que ver como empresas que lo que quieren es incrementar en sus balances el activo digital o los activos digitales que tengan. Entonces, ¿cómo hacen esto, no? Y el por qué los inversores deberían invertir en algo, en una compañía de estas, si luego tenemos instrumentos como ETFs o podemos comprar Bitcoin en spot. O sea, al final, la premisa y la hipótesis inicial es que estas empresas son capaces de incrementar el Bitcoin por acción que tienen mejor que lo podría hacer un retail o nosotros mismos, ¿no? Entonces, al final, una de las métricas que más se está utilizando para analizar todo esto de las DATs es el Bitcoin per share o el Digital Asset per share, ¿no? Que viene a ser cuánto activo digital por acción eres capaz de darle a tu accionista, ¿no? Porque al final los accionistas que se meten en todo este tipo de empresas son gente que realmente cree en ese activo digital y que le interesa que la empresa trabaje por él y adquiera esos activos digitales de más. Entonces, bueno, un poco en el caso de Bitcoin, para que sepáis de dónde viene todo esto, Michael Saylor siempre lo explica, ¿no? Dice, mira, nosotros teníamos una empresa, lo que llaman es una empresa zombie, ¿vale? MicroStrategy llevaba muchos años en el mercado y por más que hacían, por más que intentaban eficientar la empresa, no se volvían una de las grandes, ¿vale? Y ellos empezaban pues vendiendo licencias de software a los demás y tal. Pero por mucho más que hacían, por todo el equipo financiero que tenían y legal, no conseguían dar el siguiente paso y convertirse en una de estas grandes, ¿no? Entonces, al final, MicroStrategy tuvo la visión de decir, mira, nosotros creemos en Bitcoin, nosotros hemos hecho un estudio y creemos fehacientemente que va a crecer a un 29% anualizado en los 20 próximos años, por lo tanto, va a tener sentido el incorporar esto en nuestro balance, ¿no? Entonces, ellos fueron un poco los pioneros ya en 2020 de todo esto. Entonces, ¿qué le da esto al accionista? Le da dos cosas. Una, la apreciación directa del colateral, es decir, si nosotros tenemos una empresa en la cual su colateral es Bitcoin, por ejemplo, y Bitcoin se aprecia, tiene sentido que la empresa se aprecie también por ese efecto, ¿no? De los activos que tienen en balance. Pero es que además, normalmente estas empresas cotizan a un premium sobre los activos que tienen en balance porque son capaces de adquirir más Bitcoin del que tienen en balance, ¿vale? A través de instrumentos financieros que ahora lo iremos a ver. Entonces, muchas de ellas se utilizan solo apalancamiento, pero estamos empezando a ver ingeniería financiera que ahora veremos que la verdad es que a veces te explota un poco la cabeza. Entonces, a nivel de métricas principales, comentábamos, ¿no? El Bitcoin per share o el Digital Asset per share. Esto es un poco lo que se basan para definir si una empresa, una Digital Asset Treasury, lo está haciendo bien o no, ¿vale? Entonces, lo que os decía es cuánto Bitcoin son capaces de darle al accionista. Para incrementar este Bitcoin per share, ¿vale? Cada una de ellas utiliza su método y depende de la jurisdicción, pues lo hacen de forma distinta. En Japón pueden hacer unas cosas que en Estados Unidos no y viceversa, pero en general, ¿vale?, tienen estos tres mecanismos, ¿no? Uno de ellos sería a través del equity, ¿vale?, a través de sus acciones, y utilizan un vehículo que se llama un ATM, que bueno, consiguen diluir a mercado sus acciones, es decir, emiten más acciones, las venden al mercado y con esa liquidez que tienen van y compran Bitcoin. Entonces incrementan el Bitcoin que tienen en sus balances a través de diluir la acción. ¿Qué pasa? Que esto, si tu acción tiene demanda y está tirando, pues sí que puedes conseguir que vayas acumulando a un buen ritmo, pero si tú empiezas a diluir y esto empieza a bajar, tienes el riesgo de que tu MNAV sea menor a 1, y entonces a más dilución, menos MNAV vas a tener y más va a caer tu acción, ¿no? Entonces, el precio de tu acción. Entonces, al final, lo que se han dado cuenta es no solo podemos utilizar este instrumento, pero al final nos vamos a acabar yendo a cero, ¿no? Algo que también han estado utilizando mucho, sobre todo MicroStrategy al principio, era el tema de la deuda, es decir, emitimos deuda para comprar Bitcoin, pero eso tiene sus riesgos, es que al final te estás apalancando, y si ya lo vimos con MicroStrategy en 2021-2022, cayó bastante el precio de Bitcoin y llegó un momento que a lo mejor casi ni podían repagar la deuda, ¿no? Entonces ahí dijeron, hostia, quizás tenemos que reinventar algo para que no nos vuelva a pasar esto. Y entonces empezaron a utilizar otros instrumentos como preferentes o incluso lo que comentamos aquí, ¿no?, las adquisiciones de otras empresas. Y es que ha llegado el momento en que hay algunas empresas que adquieren Bitcoin y el valor de su empresa cotiza por debajo del valor del Bitcoin que tienen en balance. Entonces, empresas grandes como MicroStrategy dicen, hostia, si yo me compro esta empresa, que su valor vale menos que el Bitcoin que tienen en balance, estoy comprando Bitcoin a descuento. Entonces, al final es una manera también de incrementar el Bitcoin por acción que tienen estas empresas. Entonces, ¿qué ha hecho MicroStrategy? Y aquí viene un poco la madre del cordero y lo que va a hacer mucho ruido a partir de los años que vienen. Y es que ellos han querido atacar el mercado de renta fija, ¿vale? Han dicho, mira, ahora mismo el risk-free rate está en un 4% en Estados Unidos y tienen visiones de que esto va a ir bajando. Ellos se han dado cuenta que a través de la dilución de sus acciones y del apalancamiento quizás no es la mejor herramienta para seguir acumulando Bitcoin, y lo que han dicho es, mira, vamos a sacar unas preferentes que tienen una seniority mayor que la acción, y vamos a intentar darle a nuestro accionista entre un 8 y un 10% de yield con colateral Bitcoin, ¿vale? Esto lo consiguen de varias maneras, pero la tesis principal es que ellos consideran que Bitcoin se revaloriza un 29% anual para los próximos 20 años, y a ti te están pagando un 8 o un 10. Entonces, aquí hay el arbitraje que están teniendo ellos, o sea, que se están llevando ellos. Pero no solo ganan con este arbitraje, sino que estas acciones tienen una demanda que luego ellos vuelven a diluir estas acciones y adquieren Bitcoin con esta demanda. O sea, es que es como un doble factor, ¿no? Entonces, en este punto quería comentaros un poco Stretch, que es a mí la que más me gusta de estos productos que tienen, es STRC. La tenéis que entender como si fuera una stablecoin, ¿vale? Ellos lo que han dicho es, mira, nosotros te vamos a dar un 9% anual y el valor se va a mantener entre 99 y 101 dólares. Si el valor cae de 99, incrementamos el yield para atraer a nuevos inversores, ¿vale?, lo que hace que suba el precio de la acción. Si el precio de la acción se va más allá de 101, aquí esto es la caña, porque si vale más de 101, diluimos la acción y compramos Bitcoin con esa dilución, o bajamos el yield y entonces quitamos un poco de interés de la acción y el precio cae. Entonces van a conseguir mantener, o con este instrumento van a conseguir mantener el precio entre 99 y 101 y les va a permitir comprar Bitcoin. Cuando sacaron esta preferente al mercado, querían abrirla con una IPO de 500 millones y la demanda fue de 2.000 millones, o sea, que la verdad que las expectativas fueron mucho mayores de lo que ellos esperaran, y no sé si compraron esa semana unos 15 o 20.000 bitcoins gracias a este instrumento, ¿no? Entonces aquí está lo que se le llama la BPS Flywheel, que al final es lo que levanta un poco de ampollas, ¿no? Pero aquí la idea es, el precio de Bitcoin sube, como nosotros tenemos Bitcoin en tesorería, el precio de nuestra acción o de nuestra empresa sube, diluimos la acción, compramos más Bitcoin, que hacemos a su vez que el precio vuelva a subir. Entonces entramos en esta rueda, ¿no? Que como podéis ver aquí a través de los diferentes instrumentos de equity issuance o de debt issuance, conseguimos que a lo largo del tiempo lo que ha estado pasando es que el BTC Yield o la capacidad que tiene esta empresa de adquirir Bitcoin va hacia el alza, que es al final lo que a ellos les interesa. A ellos el fiat les da igual. Un inversor de MicroStrategy no mide en dólares, mide en cuánto Bitcoin está esta empresa consiguiendo adquirir. Entonces, lógicamente, esto tiene un riesgo implícito, es que si no eres capaz de gestionar la deuda o el riesgo que tiene esta empresa, pues pueden salirte las cosas mal. Y de hecho veíamos el caso de Bitmain, en el cual hicieron una venta de opciones de una forma que no lo supieron gestionar bien y diluyeron demasiado su acción y bueno, bajó por debajo del 1 en el NAP, y eso al final te pueden llegar a comprar la empresa, porque al final está llegando a ser mucho más barata, ¿no? Entonces, aquí la gestión de riesgos es muy importante en este sentido también. Entonces, esto es a nivel de Bitcoin, ¿vale? Pero lo que hemos estado viendo estos últimos meses es que no solo han salido tesorerías de Bitcoin, sino que además lo que quería el mercado, así como en las petroleras lo que se valoraba mucho es también el petróleo que tenían ellos, y eso era una parte importante de lo que valía la empresa, es también la productividad que tenían esas petroleras, ¿no? Y lo que estamos viendo en el mundo de los activos digitales es que está pasando lo mismo con activos como Ethereum o Solana, que también dan un yield implícito, ¿vale? Otra cosa es que tengan una inflación mayor al yield que te dan, que esto hay algunos casos que sucede, pero bueno, es todo analizarlo. Entonces la idea un poco aquí de los otros activos que no sean Bitcoin es que además muchos de ellos te dan un incremento en yield que puedes contar en tu tesorería. Entonces, en el caso de Ethereum, estamos viendo cómo los grandes están empezando a utilizarlo para todo tipo de vehículos, como tokenización de diferentes activos reales, utilizarlo como intercambio para stablecoin, etc. Entonces, Ethereum se está volviendo una capa en la cual los grandes están empezando a destinar ahí bastante capital. Entonces, esto al final hace que su capitalización y su precio se revalorice, lo cual es perfecto para una treasury de activos digitales. Hemos visto esta correlación en la cual, conforme las instituciones están empezando a desplegar más tecnología y más productos por encima de estas capas, lógicamente su capitalización sube, y no solo lo estamos viendo con Ethereum, sino que lo estamos viendo con otras monedas como puede ser Solana, ¿no? Entonces, al final la idea es no solo acumular estos activos por acumular, sino que te están rindiendo, te están dando un yield que tú eso puedes encontrar la manera a través de diversos vehículos de dárselo a tu accionista también. Entonces Ethereum en ese sentido es el rey, por lo menos cuando no hablamos de Bitcoin, ¿no? Entonces, bueno, simplemente era un poco esto, comentaros cómo vemos nosotros todo este tema de las digital asset treasuries y que veáis que no es... O sea, sí que puede parecer desde un punto de vista que están liando un tinglado importante y que si se rompe algo puede salir mal, pero al final, si vais a la página web de MicroStrategy, por ejemplo, tiene una calculadora en la cual tú puedes poner el precio de Bitcoin y calcular la deuda que tienen y cuáles son un poco sus assets y liabilities, y os daréis cuenta que el precio de Bitcoin tiene que caer mucho y mantenerse en un nivel muy bajo durante mucho tiempo para que realmente vaya a poder romper algo. Entonces, bueno, si sigue como está siguiendo todo, parece que estas empresas tienen un buen recorrido y se pueden llegar a llevar una gran parte del mercado. Entonces, bueno, si tenéis cualquier duda, estaré por aquí y lo comentamos todo. Muchas gracias por escucharme.
Yes, Eric, thank you very much. Now we're going to have Richard from Sys Capital giving us a little chat around his fund and what they're doing in Sys to basically help the community. Thank you. Just give you this.
Thank you, Carlos. And lo siento, no puedo hablar en español porque es un poco complicado, pero en inglés es okay. Lo siento. I don't really like to stand up and promote products, so I put together a little presentation of just some things that are happening that I thought might be interesting. And obviously, you know, Carlos and the team at Morabanc have been amazing partners, so thank you for having us here to talk about it today. So I'll just give a quick intro of myself and what I do. So I'm a managing partner at Seize Capital. I'll flick forward to just to quickly explain Seize Capital before going into some more detail to give you some context. We look after three core buckets within alternative assets. So we are focused on hedge funds. That's something that we're actually within the Seize group we've been doing for 30 years. We rolled that business into Seize Capital when we founded it in 2018. And now hedge funds is actually where we focus on crypto hedge funds, and I'll come to that later. We also do legal assets, which is litigation finance. You might have heard of this. Lots of people think this is something like ambulance chasing, where you fall over at work and you sue your employer. It's not really that type of thing. We don't do that. What we try to do is actually help people. This is actually a a very ESG focused initiative. So you imagine, for example, a chemical company poisons the water in a village in Southeast Asia. Obviously, the villagers can't fight to defend themselves, so we come in and help them do that against this big corporate that is being pretty irresponsible with their water supply, for example. It's a very nice business, 20% IRR target. It's really a beautiful profile. It draws very slowly, if you think about it, compared to a venture fund or a private equity fund. You commit capital, but actually the only outlay that you're having is to pay lawyers. So it's kind of slow draw. And then, of course, we have private equity. So we do two things within private equity. We do European mid-market buyout, and we also buy companies in German-speaking Europe. We're based in Zurich, and so our team is all German-speaking. So that is the DACH region. So Germany, Austria, and Switzerland, German-speaking. But to come back to the matter at hand, so I'm obviously my big passion, well, not obviously, but you'll see as you sort of look through the roster of the things I do, I'm very Bitcoin focused. And so I have just recently agreed to chair a Swiss Bitcoin treasury company, which obviously Eric gave us a good introduction to. Switzerland's an interesting market for this because we have zero interest rates. So if you think about what Strategy is doing on the Stretch, Stride, all those products, then obviously he's going into the market with sort of anywhere between 8 and 10% interest rates. Whereas in Switzerland, if you can get 2% on your Swiss francs, you're extremely happy. So we've got a strategy to get towards perpetual preferred equity, which will be paying somewhere between 5 and 7% against obviously the CAGR of Bitcoin. I also host a podcast to talk not just about Bitcoin, but around some of the issues that we have in the world. One of the ones we did recently, which is I think a really fun and important conversation, is AI and the impact on our children and what careers they should be choosing, what education path they should be choosing, because frankly, I think parents are completely out of their depth. I'm a parent. I'm completely out of my depth when people ask me what my son should be doing at university. I have honestly no idea in this world. So, I got an expert on to talk about this. So that's what I do, is sort of just bring in people that are way smarter than me to talk about stuff that's happening in the world that we really don't understand. And I always give my guest a nice Seize the Future Toblerone, which I gave a couple to Carlos to say thank you. I'm a board member at a group called Relay. Relay is a Bitcoin-only broker in Switzerland. And again, the reason that I support a Bitcoin-only company is because the problem I find for a lot of people first moving into this space is if you go onto Coinbase, and we run a fund on Coinbase, it's almost impossible to find Bitcoin. You're looking through Dogecoin and this other coin and nonsense coin, and it's very confusing. So I really am very behind the idea of a Bitcoin-only platform, and so that's why I joined Relay as a board member. One of the fun things I do is work as an advisor to Jan3. So Jan3 is a nation-state advisory company to help nations understand why they need to adopt Bitcoin. If you look at South America particularly, it's an interesting jurisdiction because it's a very resource-rich continent, but you take a country like Argentina, and they've kind of been battling with inflation for years, but actually, if they could build out their energy infrastructure and leverage Bitcoin to do that, then they could actually really free themselves from the problems that they've created from the IMF and the heavy debt burden that they have. So this is some of the work that we do. We're currently working with a Central Asian country to help them do the same, which is advancing quite a lot, which would be an amazing thing and really pave the way to a lot of other countries freeing themselves from this IMF burden that they have. So I was previously in investment banking for a very long time. I was at Nomura. I ran derivative trading and distribution for over a 17-year period with them. So, getting to the product that we work with Morabanc on, we have two products in the fund of crypto hedge fund space. The one that we work with Carlos and the team on is our dollar-denominated fund, and this is really focused for hedge fund investors. So if you are allocating capital to traditional hedge funds like Millennium or Point72 or these types of funds, then you really, you want to be looking at different buckets of alpha, as we refer to it. And the target IRR on the fund is 15-20%, and that's in line with some of the best hedge funds in the world. But that's because the inefficiencies and the fragmentation of liquidity, for example, or the dispersion that you have between pricing is very, very interesting within crypto. And so last year for Morabanc and their investors, we managed to return 16-17% net of fees. So this is exactly sort of the ballpark that people are looking at. And as I said, to be able to do that in a fund of fund, where you've obviously got some fees in addition to the manager's fees, that just shows you the amount of alpha that is available in the space. So it's really important for us that we protect capital during drawdowns. Carlos mentioned the fairly hairy weekend we just went through, where you saw some wrapped Solana on Binance, for example, trade to almost zero. Sui token, which was considered one of the best tokens in crypto. I think Raoul Pal had put most of his liquid net worth into, traded from 3.5 to 0.5. So, I mean, it just shows you that crypto doesn't really have a natural bid. Obviously, Bitcoin was very resilient through this period, but I'm pleased to say that the fund is flat for the month, and so shows that it protects capital during drawdown, but positions well to participate during the upside. We have a lot of very big Bitcoin people in Switzerland, but also across Europe and Spain and the rest of it. And so many of them were looking to try and have a return in Bitcoin. And so in March of this year, we launched BTC Alpha, which is a similar version of the dollar fund, but actually we target a much lower volatility. You can see the target volatility here is 6 to 8, but on the Bitcoin fund, its target is 2 to 3. Don't be confused, obviously Bitcoin volatility is much higher than that. This is just the denomination of the fund. So it's like investing in a fund denominated in Swiss francs or in euros or in US dollars. This is in Bitcoin. So whatever Bitcoin does against the dollar or the euro doesn't really matter. We're talking about pure returns in Bitcoin. And we're looking at 5 to 10% on a net basis for the investors with that very low volatility profile. For us, we're allergic to drawdown in this fund. It's really, really important that we just constantly, even if it's just 5 or 10 basis points a month, we need to be just having positive returns. So those are the two products, and happy to jump into questions at the end about the fund, but I thought it might be interesting for people just to see some of the things that are going on in the market at the moment that could really explain some of the phenomenon. And one of the things I didn't mention is that the dollar fund is having a bit of a boring year. As I said, in flat months or uninteresting months, we try to protect returns, but in bullish months, we try to participate in that. We really haven't had any too excited months so far this year. So we're sort of looking at just inside of 5% on the dollar fund at the moment. So why is that? Well, funding rates have been very low due to retail participation being very, very low. I think that a big part of this has been the the meme coins that we've seen. Meme coins are like crypto coins on drugs. It's like, I remember seeing some chat on Twitter about these meme coin founders saying, can we not rug pull people so quickly so that we can push these coins higher? And you're just watching it. It's just like, it's really crazy. So the scams have just got harder and harder and faster as we've moved into the meme coin space. And so people have just lost so much money. I really think that we've seen retail completely give up on the sector, which is again why I try to focus on Bitcoin and focus the education work I do on Bitcoin. But to just explain, one of the big ways that our hedge funds make money is through the funding rate market. So what does that really mean? That means that if I'm a retail guy, I think Bitcoin is going up, then I want to go into the market and buy Bitcoin on a certain amount of leverage. And leverage is another problem, which I'll get into. But essentially, these funding rates talk about the futures market and the amount of leverage that is in the system and the amount of funding rate that is being paid. So obviously, Saturday night, we saw the biggest liquidation we've ever seen. I think it was close to $20 billion. That's 10 times what we saw for FTX. Right? So funding rates have been trying to pick up, but you can see these rates are 2024. So these were very profitable months. Right? This was December 2024. In the fund, we were making like 3-4% in a month for these periods. But then as that drifts away and you see more and more liquidations happening, then funding rates just go lower and lower into flat. And this is only actually updated to September. And now with what we've just seen on Friday, those are going to be back to basically zero or negative. So this is removing a lot of alpha from the space. If this isn't rich, it makes it very difficult for managers to make money. This is a big part of the alpha pool. So you can see again here being demonstrated the retail investor demand. We are basically at zero interest. Even with Bitcoin touching new all-time highs, 126,000, retail investors are at zero. They've just been burned completely with this crypto nonsense. And then of course, one of the managers focused on vol arb is here today. But you can see volatility in Bitcoin has been dropping. And again, this is not great for volatility arbitrage. It's interesting when vols are super high and extended because you can be trading some very interesting strategies around that. So as vol gets lower, opportunities are not so abundant. And so you can see all of these things coming together. But for me, this is the most interesting chart in crypto right now. And this is persisting. So this was updated again sort of mid-September, but it's still same situation. That green chart line is global M2 liquidity, right? And that is across the board, US dollar, what the Chinese are doing, the Japanese, everybody, right? It's just spiking through the roof. And what this is a price lag. So global M2 liquidity on a 3-month lead basis against the price of Bitcoin. It's been very, very interesting. This is correlated for a long, long time. So when people tell you that Bitcoin is all about the scarcity and supply and demand, actually the big thing is global liquidity. And what we've seen is a complete decoupling of global liquidity to the price of Bitcoin, which is very interesting. What's actually been happening? What's been happening is that long-term holders of Bitcoin have been selling huge amounts into the market because where we are right here, right now, is at the end of the 4-year normal liquidity cycle that we see in Bitcoin. Okay, so this quarter, if you look back to 2017, we saw a 2,000% increase in the price of Bitcoin this quarter, 8 years ago. 4 years ago was 2021. That was all cut short by Jerome Powell raising rates in November, again, liquidity being the issue, right? And we hit all-time highs of 69,000 in Bitcoin. That was off the lows of 2019. What was that? It was a 20x, right? But that was obviously took 2 or 3 years to do that 20x, whereas in 2017 we were doing a 20x in a single quarter. So a lot of people that have been in this space for a long time see this quarter, where we are now, Q4, of the 4-year cycle, 2025, as being the key quarter where you're going to see, the final highs of Bitcoin. So what we've seen is a lot of the very big holders of Bitcoin dumping Bitcoin into liquidity, but it's getting absorbed. It's very interesting. So institutional buyers and nation state buyers don't want to chase the price. So they'll just sit there quietly on the bid and just soak it up. And I think what was very interesting was about a month ago, maybe 5 weeks ago, we saw a whale come into the market on a Sunday afternoon about 3 p.m., sell 29,000 Bitcoin in a 1 hour period. Now, there's only one reason that you do that on a Sunday afternoon, and that's because you want to force liquidations. Right? The way these whales play is they come into very low liquidity markets, they smash the market, they force liquidations, and then they sit there on the bid to soak it up. But what happened was they sold an enormous amount of Bitcoin into the market, $3.5 billion worth, and it barely moved. So that just tells you that there's an institutional bid just sitting there, right? BlackRock apparently were one of the biggest buyers on Friday because they had limit orders just sitting there with their institutional buyers for the ETFs, so they had buyers in the market over the weekend after the close. And we're seeing this across the board with the nation states as well. Across the Middle East, Abu Dhabi, Dubai, Saudi Arabia, all their sovereign wealth funds are all accumulating Bitcoin, either through the ETFs or real Bitcoin. So it is very, very interesting. So the game that's being played here is obviously one of accumulation by the nation states and the institutions. The whales are sort of falling slightly into the trap of the game that they've played for so many years has worked before, is not actually working this time. But you're seeing a huge divergence between that liquidity impulse and the price of Bitcoin. So our view very strongly is that once this clears, once we see the whales be cleared out, then we're going to march higher much faster. And Bitcoin's already underperformed gold. If anyone sitting here understands the difference between the monetary properties of gold versus Bitcoin, you know that Bitcoin is superior, and there's no reason that Bitcoin will not catch up. So we're very bullish going into next year. We think that Bitcoin will be achieving new all-time highs. So I think that this chart is probably one of the key indicators of that. So this is put together by BitQuant, I believe, a Korean group that do a lot of focus on Bitcoin. They see that obviously the overrun that we're likely to see, and that sort of gives you an idea of where things can go when things do spike and catch up, is we're looking at sort of they're looking at a $208,000 price. Their floor price is obviously much lower, and that's what you would expect to see right here, right now, if we did revert into a bear market. But you can see even in FTX period that was touched very briefly and then reverted from. So that's sort of the range that you're looking at right here, right now, and gives you an idea of capital inflows. Coming back to the alpha of the fund, this is a correlation chart that we found worked very well for statistical arbitrage. So statistical arbitrage is sort of a little bit like a very short, momentum-driven long-short strategy. And it shows you that as correlation rises up in the top 15 coins, then actually the stat arb managers cannot make so much money. So obviously here in December 2024, again, our stat arb managers were making a huge amount of money. So again, everything is in a fairly difficult point for hedge fund managers in the crypto space to be making money. However, this is actually providing quite a nice setup because you've got funding conditions turning very favorable. Now that clear out's happened, you're starting to see a build up of funding positions again, and actually in a much healthier way. You're seeing obviously the liquidity tailwinds that are coming. So once you see Q4, Q1, Q2 of 2026 start to drive that liquidity convergence higher, then we do expect that to pick up in the funding space as well. We are seeing also retail activity start to pick up again, even post what happened on Friday. A lot of people have looked at that and go, okay, right now I've been waiting to buy Bitcoin or whatever other crypto for a while. This is now my opportunity. And DeFi has been maturing really nicely. So actually the most consistent performance from our managers this year has been in the DeFi space. So the guys that have been in there for a long time have actually been making some really nice returns. And because they're big allocators in the space, they actually get quite a lot of rewards in the underlying tokens themselves. What they do is they mark them at 0 until the point that they unlock, and then they sell them. And so that's obviously boosting returns as well. But the nice thing is, because they're marked at 0, then they're not providing that volatility to return, which we obviously don't like in the portfolio. Final point, and I touched on it before, just about the fund, and sort of just to give you an idea of how it protects capital, because this is actually very important. If you're sitting there and allocating your capital, you don't want to be exposed to the volatility of this space. So you can see these are the various different months where Bitcoin and or crypto suffered a huge drawdown. So this is Bitcoin in yellow and crypto, other coins in green. So you can see this is the performance of the fund actually consistently over that period. Caescrest was up 2.5%. If you aggregate them all, and you say, like, I buy at the beginning of this month Bitcoin and I sell it at the end of the month, you would have been down 67% in dollar terms. On crypto, you'd actually lose all your money and an extra 43% doing that. So it's obviously a very nice structure for people to get exposure. So I don't know, Carlos, if you wanted to do questions. Do you want to do that, or?
Any questions for Richard? I think it's a really good opportunity to have, just kind of basically just processing everything, and like 3 years like behind right now, processing this information. I think the opportunity of having such a master class here is, thank you very much, Richard.
Sure.
So, any questions for Richard from the floor?
Richard, so regarding the M2 chart that you were showing us with
Yeah.
the Bitcoin price,
Yeah,
do you
yeah.
think that this correlation is going to go back as it's been in the past, or now maybe we are going to not see the correlation and
Look, it's a good question, and history is never a good indication of what's going to happen in the future, and we can only assess models. And as Michael Saylor always says, all your models are broken. And it's true. Like, every model eventually fails. So I think it's just a very good indication of an understanding of what is coming. This M2 growth is not reversing, right? We know that. Like, every country is massively indebted, even in Western nations. So essentially, that is going to be a driver of Bitcoin eventually. The correlation of the two things might have to be on a longer lag basis going forward for it to map properly. I don't know. But yeah, I mean, for the moment, it's broken, right? So we'll see what happens and if it does revert, right?
Is this money sitting idle anywhere? This mismatch of the two lines there?
Yeah, I think that's another good question. I mean, like, how bad is it for the crypto market that these wipeouts keep happening? Like, that 20 billion wipeout, is that just money that's been killed into the space for a long time? Where else does money sit? And I think this is one of the things that Saylor's doing very, very well, is he's addressing each of those capital pools where money is sitting and struggling to be put to work, right? If you're a US dollar investor, your risk-free rate is, 4% right now? And your real rate of inflation is 8 to 10%. So you're on a real rate basis, you're losing money on every investment you make, right? And quite quickly as well. So I think there's a lot of money that is, to your point, sitting there just trying to find a way to correct this massive loss. And obviously Saylor's saying, okay, you're a bond investor, you can only allocate into fixed income products, therefore I'm providing you something you can invest in at a rate that you would find interesting. So I think, yes, there's a lot of capital that's sitting in different pools that needs to be addressed. And again, this is the problem that we have in Switzerland. This is why so many people have said we need to do something in Switzerland, because interest rates are 0. And if you sit your money on a bank account in Swiss francs, like, sure, okay, in dollar terms you're making money because the Swiss franc keeps strengthening, but you're actually losing your Swiss francs every year. And if you think in Swiss francs, you're getting poorer. I mean, everybody's getting poorer anyway because of what's happening to the fiat money, but in Swiss francs you really feel that way, because also inflation in Switzerland reported is very low, but actual is very, very high. Sorry.
And how do you think the market cycles of Bitcoin will change? Because we've been used to the 4-year cycle with halving and seems that this time could be different. Institutional adoption is
Yeah.
really thriving. Do you see it behaving like more similar to the SAP, like constantly rising with smaller and shorter bear markets, or do you think we could have a 2-year bear market that will come in a few months, lagging on the year cycle? Because this time we had an all-time high before the halving, for the first time in history. So I think this has changed how the market structurally behaves. But I'd love to hear your opinion.
Yeah, I'm leaning more and more towards the 4-year cycle is broken. Like I think, you know, that story I told about what that whale did on the weekend, if they'd done that in any previous cycle, we would have crashed massively. Like that would have been the beginning of the bear market. So the fact that they were able to do that and drop it only 3% is really insane. And what happened last weekend? I mean, $20 billion. That is a huge number. I'll just remind everyone, I was in hedge funds for a long time. Amaranth was a $6 billion hedge fund. I don't know if you guys know that. I'm pretty sure, Richard, you've heard of Amaranth. But Amaranth was a $6 billion hedge fund, nearly caused an entire financial crisis in the traditional system through that blow up in the commodity space. And now you're looking at a $20 billion liquidation that just happened on a Friday night after the market closed. And Bitcoin is down what, from, it was 122,000, now we're at 110. So it's barely even 10%. It's insane. Like, it is insane the amount of liquidity that is being bid for Bitcoin. I mean, that just shows you, right? The institutional bid is very, very deep, right, in this space. So, yeah, do we have an 80%, 70% drawdown? What would drive it to be so? I don't know. I think you'd have to have a major problem with Bitcoin. Maybe something in the order of, you know, this op return versus NOTs debate becoming a real issue. And, you know, you have a problem around people's trust of the system. But I really can't see anything other than that. And I mean, the whole ops, I don't know if you're following the op return versus NOTs debate, but that whole debate is actually leading towards one thing, and that is ossification of Bitcoin, i.e. Bitcoin is not going to change, right? And that's, for me, this is one of the biggest problems with Ethereum is it's constantly changing the roadmap. It's like a tech startup still, right? And people are talking about doing a digital asset treasury based on Ethereum. That's pretty insane in my opinion, but you know, that's a different subject. Anyway, did that kind of answer your question?
Yes, I think we're pretty aligned.
Okay, good. Sorry.
When will retail come back?
It's a great question.
And are they being crowded out by, say, crypto-linked stocks and like equities in general?
Yeah, I think as I said before, I think the meme coins have been a massive distraction. I had lunch with a fund manager on Friday, and he was telling me some of the stuff that's happening in like degenerate crypto. Like one of the platforms, Astor, has now offered 1,000x leverage. And you're like, what? Like you get one tick on the bid offer spread, you're liquidated. And he's like, yeah, it's literally a coin toss. But like, this is the problem, is you've got this high level of degeneracy where there's a huge amount of insider trading, by the way. Like any coin that's about to be listed on the new Binance platform or Astor, you know, if CZ knows who they are and he's going to support it and tweet about it, and you know that, then that's going to do a 100x very quickly, and you can, you know, take some money. But it's all insider trading. It's all completely scammy, and I'm pleased that retail are hopefully continuing to stay away from that area because they've just been burned too many times. And this is one of the things the guy said on Friday. He said, the thing is, it all makes, over time, it just makes people longer term Bitcoiners because they just realize that everything else is just a complete scam. And I think it's really sad, but yeah, I mean, we need to see Bitcoin just be less volatile, more resilient, demonstrate through these difficult periods that it's, you know, I mean, a lot of people talking about Friday night made a lot more Bitcoin maxis, and I think it's true, right? So when do they come back? They come back to Bitcoin hopefully soon, but you know, maybe price is the key indicator, 180, 200,000. Then people are like, oh gosh, maybe this thing can go to 1 million, you know, maybe I should buy some. But the biggest problem we have is education. Like, people just don't understand what it is and why Bitcoin is so important and why the other coins are very confusing, right? And they're basically just tech startup projects, which, you know, sure, one or two of them might do very well, but Bitcoin is absolutely clear, right? It's disrupting gold. And from there, it can disrupt a lot more because it has so much more flexibility than gold, right?
Good.
Sorry, can we get one?
We go.
Okay.
Hi, Richard. Thank you for your speech. My name is David. Based on your experience, who you think he's going to win the race? The real world assets or the central bank digital currencies?
Oof. I do hope the central bank digital currencies don't win. You know, again, I think the problem that we have is there are a lot of people in government that sit there and think technology is really great and we need to be forward thinking and the rest of it, and they don't really think about all the forward looking consequences, right? In the UK, they're trying to impose digital ID. In Switzerland, we just voted for digital ID. I mean, it's really quite scary in terms of where we're going. I've been in Hong Kong for a long time. I had to leave Hong Kong at the end of 2021. It was just getting too crazy with COVID, and the Chinese, just sort of the authoritarian approach that was coming over from this sort of very communist country. And you know, digital ID leads into all of that. Like now, they've had digital ID in China and digital currency in China, where they pause your money. You can't spend money on transport if you get caught jaywalking because they have visual ID on all the pedestrian crossings. Social credit scoring, exactly. And so this stuff is super scary and frightening. And the problem is that because our nations are so indebted, they need greater control. They need people to stop talking like the way I'm talking, right? And explaining some of the things that are happening, because essentially the currencies are all failing. And if everybody starts moving into Bitcoin, if you keep printing that currency, you're just going to cause hyperinflation faster. So control needs to be implemented, and the digital ID and the digital money, central bank digital currency, is sadly a very big part of that. So I urge everybody to look into what central bank digital currency implications really are. It's very scary what's happening in China. Like, you really don't want that to start happening in Europe. And I really urge everybody to think carefully about it, because lots of people are, oh yeah, I'm in blockchain, Web3, CBDCs, great, yeah, love it. I don't think they've thought through the consequences, and it scares the hell out of me. Yeah.
Thank you.
One more question and we carry on.
Thank you so much. You mentioned that one of the biggest returns you've got from your teammates is from DeFi strategies, right?
Mm-hmm.
At the same time, you also showed us that you did some strategies in arbitrage of Bitcoin. So my question is, do you consider some BTC-Fi strategies?
BTC what?
BTC finance strategies.
Ah, okay.
So when you have basically Bitcoin, but maybe
wrapped Bitcoin.
Maybe wrap, or maybe you borrow I don't know, Solana against Bitcoin and do some DeFi activity at the same time, making it like kind of neutral by leveraging the.
Yeah, just to be very clear, we don't do any of this. So we allocate to managers who do this, and yes, we have 3 DeFi managers in the portfolio that do this type of thing, right? So we have all 3 of them have a Bitcoin denominated fund, so they do exactly that. They'll take the Bitcoin, they'll wrap it, they'll use it in the infrastructure to get those returns. Yeah. Okay.
Thank you very much, Richard.
Thank you, Carlos. Thank you, everybody. Thank you.
Okay, thank you very much. Very, very, very interesting discussion. So I really recommend you look for Richard on the network. Especially his podcast is a really, really nice podcast. He's doing a really good job, especially educating, which is basically something that we are in. This is kind of an education session more than anything else. So thank you very much again for sticking with us. Now, for the last one for the day, we have Carlos Matilla from Morabanc. So he's going to explain basically, more on the real world asset side of things. What are we doing? We are investors also in his company from the bank in terms of BC type of investment, and also collaborating quite closely just to make this a reality. This vision of having of having real estate projects being like traded in an exchange as any other asset. So thank you, Carlos, and please, big round of applause for Carlos, please.
Hello, hi everyone. Thank you so much, Carlos, again for inviting me. I think lately I'm just working on speeches with Morabanc. So look, just before I jump into the details, quick introduction. So I'm Carlos Matia. I'm the founder of Morabanc, which is a real world assets platform, initially focused on real estate assets that is also exploring other real assets like infrastructure projects or anything on the private market side. I've done my career in investment banking mainly, so I'm coming from more than 15 years in investment banking, doing M&A, capital markets, financing, so I know very well traditional financial products. And basically the vision that we have in Morabanc is to bring assets, real assets, and the real economy and financial industry on chain. So that's basically one of the main purpose that we have. So before jumping into what is Morabanc, I'd like just to give a quick overview of where the market is as well in terms of real world assets, market trends. So when we talk about tokenization of assets, what do we mean? It's not just real estate, it's much more than that. So it's actually trying to bring capital markets across FX markets, across repo markets, financing, any kind of financial instrument that today it's been managed in a traditional way. So bring it on chain to bring all the benefits that the technology has in terms of programmability, transparency, settlement, to reduce cost, to enable new distribution channels. So that is what is actually tokenization about, right? It's not just to represent something on chain and then just sell it, which is great, but it's actually much more than that. So that's what we are actually doing. I have also another company that's called AI Builders. We develop software for FMIs, for banks, for funds, or for any kind of financial player. And basically our vision is to build the next infrastructure of financial markets. So my speech is going to be much less, I think, exciting to the one that Richard made. So we are mainly building on Ethereum. So basically, I kind of agree with what you said, that Ethereum is still kind of, evolving and the roadmap keeps changing. But I believe it's the most stable technology that is actually enabled to build programmability of financial assets and bring them on chain. So it's probably the only technology and the only protocol that really brings all these benefits, where you can streamline a whole life cycle from issuing a bond, a fund, to issue it, to manage it, and to trade. So I think this is where Ethereum is very into it, right? So I think it's Eric as well also showing one of his curves, as much as Ethereum grows and real economy is bringing in financial markets on coming on chain, then the value of Ether will grow. So I think it's a completely different thesis than the one that, for example, Bitcoin has. And there are some other protocols like Solana, Hedera, that are also entering into this space and are adding much value into it. So I think there is some kind of now competition between different protocols to push for the enterprise and to bring capital markets on chain. And again, bringing capital markets on chain is something that is very complex. So it's not just, as I said, and I keep repeating this, it's not just taking a ERC20, just put in and move it. It's much more than that. There is an asset, there is a fund that you need to manage, that you have, where you might have capital calls, where you have redemptions, where you have coupons, where you have dividends. So all of these things, when you program those rules using Ethereum-based technology, you can bring a lot of efficiencies. And there are billions of investment at the moment being made by the banks that are trying to catch up as well, all the benefits from crypto, by FMIs, by asset managers that are actually looking at this technology to disintermediate as well, and to get rid of some of the FMIs or the servicers that are not adding that much value in part of that. And I think this is what it's all about, right? So you yesterday I was also again watching Larry Fink again saying that the next, so he keeps saying obviously he has investments in some companies and he has interest in that happening, but it's really happening. So the asset managers are seeing blockchain technology as something where they can bring new products, remove cost, and get into the direct investor, institutional, retail, private banking in a much more linear manner than they do today, where they need to go through T+2 processes, to a lot of FMIs, servicers, etc. And I think this technology really is already proving that this is happening. And in Morabanc, we are actually doing it for specific asset class. But again, we are exploring more assets. But I think this is really happening. And then you have like other use cases, which I think are also quite interesting. In the big banks, the big major banks are now looking at using this technology, for example, to manage internally. Groups like Citi or Santander, they have many branches, many legal entities, and they need to move their treasury. So a nice way to move 24/7 deposit tokens from their clients or intra-group treasury movements using blockchain technology and using programmable money like deposit tokens in this case. So again, it's the variety of use cases is huge, right? So I have prepared this, which is a combination of some of the reports that are out there from BCG repo and some of our own building, where you can see the split basically when we talk about real world assets, how this is being split in for the future. So obviously the first asset class that is promising to be on chain is cash and deposit. So cash, that's three versions of money. Central bank digital currencies, which is one that especially the retail one, no one really wants that to happen, but it's happening for and I know in Europe, especially trying to compete with whatever is happening in the US. The central bank is working with the central banks in the different countries of Europe to enable and to create those infrastructure. So that's quite, I think it's happening, right? Then CBDCs also have a good usage for wholesale banking. So I think that's where I think it's very, where the value is bringing for the wholesale market. So having CBDCs where you can settle bonds, so you can do repos, you can do payments between banks in the wholesale space. CBDCs are quite helpful for that. Then you have deposit tokens, which, as I said, there are a means of payment for the banks to manage intraday liquidity payments, and it's a nice way as well to make 24/7 payments. And then you have stable coins, which is one of the key use cases, and especially in the US with UNISAC and also in Europe, we are starting to see as well some competition now with the banks teaming up to create those stable coins. And I believe the three of them will at some point be there in the market, so we will see. The problem is that the regulations in some cases are telling us that we need to settle, for example, with central bank digital currencies. So this is something that, for example, in Morabanc, we are under what they call the DLT pilot regime, so it's the new regulatory framework for market infrastructures, so for regulated market infrastructures. And the pilot regime says that whenever there is a CBDC, wholesale CBDC available, we will need to use that. So they are kind of enforcing us to use that. So again, we are not that happy because we are starting to look at stablecoin mechanism to settle transactions because we want to give the freedom to the investors to do whatever they want. But the regulation, at least in Europe, it's forcing us to go there at some point. But again, I think as soon as we start seeing those stable coins as well in Europe being deployed and being used, probably, I think we will have more arguments for the regulators to continue to use that and to give freedom to the investors to select the mean of payment they want to do for capital markets, to buy an asset, a bond, a fund, or whatever you can think. And that's probably the main, obviously the main asset class. Then we are seeing a lot of recent movement on public listed equities. So you've seen NASDAQ Robinhood saying that they want to make all the stocks that are listed, they want to tokenize those to be able to swap into and to bring that into more of the DeFi ecosystem. Again, so we need to distinguish into what is a tokenized stock that is a mirror of something that is in the traditional world, and a native digital asset, native stock, native bond, where we think there is much more value because we are actually creating new assets in the digital way. We are issuing an asset directly that is recognized by the regulators. Here we are not in the MiCA or the crypto regulation, so we fall under kind of the MiFID and the securities regulation. But I think the good thing is that we have now the regulation in place to be able to issue those tokenized securities natively with all the same regulatory coverage that we have for traditional securities. And then we have, the rest of use cases. So we are seeing a lot of movement on lending, tokenizing lending, and creating new ways of digitizing loans and to efficient much more the process of syndicated lending, securitizing assets. So that's really, again, a very good use case for the industry when you think about how much it costs, to securitize a product and how you can mobilize assets. So the banks today, for example, have very capital constraints and they need to offload risk from the balance sheet. So if you give them a channel where you can tokenize those loans and mobilize them through security, through single retransfer or any other structure, you are creating venues and you're creating value even for the traditional sector. So that's something that we are actually working on with the builders, with the other company, and it's very interesting. So again, it's the list of possibilities in the tokenization world, is not just limited to the Beadle fund that securitized issue. It's much more than that. So it's actually about bringing value to the whole financial market. And actually, the real value that we really think that we can, transform digital markets is actually in changing or replacing or evolving the current market infrastructures and bring, the next generation of financial markets like what we are doing in Morabanc, where we are digitizing the whole process end-to-end from issuance, administration, trading, settlement of securities to bring them on to T+0 and to make sure that there is zero risk and that we can bring new assets, new products, and again, the use cases there are huge. Here you just see, just to recap, so what I was saying before, I think the tokenization is about bringing more trust, more transparency to the market. Is about reducing as well the whole value chain of distribution of financial products, and is also about mobility and liquidity. So if you think about private markets that today lack liquidity, so this is a very nice way to create market infrastructure where you can bring real assets that today do not have liquidity and to start creating liquidity venues for those assets, which can be real estate assets, infrastructure assets, private equity, or anything like that. So I think this is one of the main use cases when it comes to that. And the specific part where the technology is very disruptive is on the post-trade part of technology. So basically, clearing and settlement. So the clearing disappears because you are bringing digital asset, the digital security, and digital cash all together. So you don't need a clearing entity anymore, and that's quite relevant because you bring settlement life cycles from T+0 to real-time transactions, and that's already happening. So it's you just need to take settlement with a stable coin, settle a bond, and it happens. It's not magic, so it really happens. So that's what we call the delivery versus payment process. And then all the custody and asset servicing process, again, this is where the efficiencies are massive. So the way you manage corporate events, paying coupons, dividends, all these kind of things, you are completely programming. Whenever you need to send a capital call to all your investors, you have, let's say, 1,000 investors, you can launch capital calls, settle those transactions. So that's really one of the beauty of the technology. and that reduces the cost, reduces risk, and brings more transparent and liquid markets. So this is more theory, but it's quite important because it's where I think complex events or in that servicing part of the process. So here you see the whole life cycle of security. So this is what in OpenBrick we are doing. So in OpenBrick we have a market infrastructure that is able to digitize all this process. All this process, if you think today, you have one bank that is the agent bank, then you have a trading venue, then you have a clearing entity, then you have also the custodians, and then you have asset services all around, and they're all different players, all playing their, chasing and getting fees for that. So in this technology, you can now bring all of these together. So you can issue an asset, you can represent all the taxonomy of an asset, including documentation and everything like that. You can trade an asset, and you can connect with different distribution entities. You can settle in T+0. You can custody. You don't need like 2 levels of custody. You can obviously open the door for custodians to have a better custody piece, but the actual technology already has the custody. And the regulators, for example, are looking at this because it's easier to go to just one place and basically check all the positions of the clients and do reporting, transaction reporting, and all these kind of boring things that the regulators are telling us to do. And then all the asset servicing, again, you can program all these rules when it comes to corporate events and make all the life cycle much more efficient. So that is actually what we have. So today, let's say you have a company or you have a fund, you want to get listed, you want to raise funds, you come to a platform like ours, and basically you can run all this process much cheaper. You are connecting with investors, you can manage all your corporate life cycle, and basically get all these benefits all in. So these are more boring things, but you see these are measures that we have actually confirmed with issuers, with FMIs, and with market participants, from market makers to banks, etc., to make sure that we are really providing value to the value chain, and you see here all the cost savings that the technology brings when it comes to all these processes that I was referring to it. But I don't want to get into much detail. Just quick overview, and then I'll explain a little bit more about OpenBrick. When I was saying before that tokenization, involves all the spectrum. So here you have a snapshot of all the financial products that you can find in the traditional world. So from capital markets to lending to global transaction banking products. So all of these products can be tokenized and use the underlying technology to make the process much more efficient and to basically enable easier servicing, more mobility, more liquidity, better distribution processes, and all basically using the same kind of logic. So obviously each use case has a different view, but you can go from the FX business. So for example, FX today you can do T+0 settlement of a cross-currency swap, basically being the notary. So the ledger, the technology acts as the notary and settles transaction from one currency to the other, from one bank to the other. So think processes that today take 2 days. You remove that operational risk, that counterparty risk, by bringing the transaction all together. This is something that we are actually doing already with some groups, and concretely with London Stock Exchange. We recently did few transactions with major banks, with UBS, with Santander, with JP Morgan, and with Citi, where we have been able to do FX swaps in T+0 real-time transactions. LSEC acts as the notary, and the cost of transactions are being reduced massively. Bonds, repos, all these processes, again, you can bring repo transactions when you have the tokenized bond and you have the tokenized cash, so the transaction happens simultaneously. You can, get better liquidity management, so the treasurer of the financial institutions get better and instant transactions, and basically that brings and reduce friction in capital markets massively. And you have seen cases like JP Morgan, etc. Collateral management, I think on the asset management industry I mentioned, so you can issue a fund, you can manage the whole publication of NAVs, you can bring much more transparency when you connect, the asset manager with investors, and all these processes really, now start to take seconds rather than days or more than 1 day in some cases. And again, on the lending and on the transaction banking, from getting better factoring and confirming processes, syndicated lending, active credit portfolio management. So all these things, get better managed through programmability and through this technology. And I want to give you a quick overview of OpenBrick. So OpenBrick is on all these use cases is a trading and settlement system licensed in the EU. We're actually going through the final authorization from ESMA and from CNMV, and what we provide is the opportunity for real estate participants, so from real estate investment trusts, real estate funds, operators, asset owners. Anyone who wants liquidity of any of those assets, they can come to our platform. They can tokenize their asset. We don't tokenize the asset, so what we tokenize is the liability of the SPV. So we create SPV. We put the asset on the real estate asset on the asset side, and then we tokenize the liability, basically the equity or the debt. And basically we distribute that equity or that debt into institutional, private banking, or retail investors. And those shares or those bonds get listed in a trading venue, which is the one that we are currently building to get liquidity. Obviously, the liquidity will take time, so it's a new market, and every market, you need to create the demand, and we are now onboarding new distributors, new investors, and basically that will be something that will be created during the next years. And basically the same that we are doing for real estate could be done for any other asset that you can think. We are, for example, exploring data centers. We're also looking at private equity funds, and again, the whole idea is to try to create more specific investment vehicles with lower volumes, with lower tickets, so anyone can really start investing into this. And it's not just for retail purposes, so it's actually about bringing institutional investors, wealth bank, private banking investors, and retail all together in those kind of structures. And it's a product that the private banking they love it. So they are actually, we are currently investing in those structures through club investor, club deals that are super manual. They're all paperwork where we don't have real transparency of the valuation. So this is a very nice way, a clean way for me to buy an asset. I know what is the valuation. I can trade and get liquidity whenever there is obviously a match between the offer and the demand, but at least I have the opportunity to do that. And I can, invest with lower tickets. Also, there are some tax implications that are quite good in some jurisdictions that we are exploring. And it's a very nice way, to really enter into alternative. Yeah. Okay. So that's basically what OpenBrick is. So we are tokenizing at the moment residential portfolios, hotels, data centers. We're exploring even more complex structures, and the whole idea is to try to bring those alternative and real assets on chain so they can be distributed and get more liquidity of them. And that's it.
Thank you very much. Okay, so thank you very much for all being here. This is it. Basically, we still have another 40 minutes of time in this room, so we still have plenty of food to basically to stay here for a little while and have a little chat. At 1:20, I'm speaking at the main event. I'm gonna basically give some insights on basically what is the experience of a traditional bank moving on to digital assets. So happy to see you around, and again hope to have presented an idea of what a traditional bank can do on this space, like trying to build stuff by ourselves and also partnering with top people like as you've seen. Okay, so thank you very much for being here, and a pleasure of inviting you here. Thank you.